this type of volatility that we're going to see this week, stop losses don't matter, is what I want to say. Like, stop losses will get skipped. Take profits will get skipped, depending on if you're on the right side or the wrong side of the trade. So what I would recommend to do, and I'll kind of get into this here in a minute, but I would recommend to not enter until after the election is done, because the election, things that could happen in the election is, we could see a 500 pip, 1,000 pip spike in, minutes. We could see that. It's something that's a possibility. You want to be prepared for it. There's no reason to try to guess and be in unless you want your account to go negative, or something like that, which I don't recommend. But for those of you that are just hopping on, and for those of you watching the recording, this week is a major week in the news of the US dollar. Okay, so I want to get into it, and let me know if the music is a good volume. I want to keep it on, but I don't want it to be too loud. So let me know if I should turn it up or turn it down, if it's good, or whatever. I don't want it to be too loud, but I want it to exist. It's perfect. Okay, good. All right, for sure. So yeah, we'll get into it. First thing I want to show you, well, the daylight savings obviously switched here, so I'm still getting accustomed to that. I'm not really sure what really time it is. Hopefully it's the right time that we said. Okay. And pretty much starting it off with it this week, there is some news on Monday, which is the ISM and the cash rate of odd, which I don't expect those to do anything too crazy, but they are red folders. And for those of you that are unfamiliar with Forex Factory, pretty much red folders are high volatility expected. Orange folders is medium expected volatility, and yellow is light. So usually yellows don't really matter. Oranges and red can have a higher impact. Red can be really high impact. It's not guaranteed, but that's just estimated based on the past, is what I would say. What's going on, Mark? Welcome in, man. Welcome in. All right, and Tuesday is what's going to be really important. Tuesday, I recommend to not be in the market at all. I would not be in the market. I would just sit this out. I'm personally going to sit it out, but I do have a strategy for it. So because I do prefer to be, I am kind of on the aggressive and risky side of things. I've been learning to be more conservative this year, but I do love the thrill. I love the thrill, but it's always calculated risk. Like, there's certain key areas where, and if you guys know that have been trading smart money, like, odds are if there's a random spike, it's going to go to some certain area that you already knew ahead of time. So if that's the case, and if you absolutely insist on trading on Tuesday, I would just, make sure your lot size is like, a fifth the size of it normally is. Like, if you normally do a 0.50, maybe you should do a 0.10, or if you do a standard, maybe do a 0.20, just in case, because you really never know. Anything can happen. You're probably better off to just skip it out completely. So I just wanted to make sure everyone knows that, it's nothing to play around with. Like, I'm telling you guys right now, you think you have a stop loss, that will get skipped. It will get skipped. Like, you could get in a situation where your stop loss is skipped by 300 pips. Like, so I just would not be in the market when the presidential election is happening. But here's the thing. Once it's over, odds are there's going to be some really clean setups and some really good opportunities to take trades. So I did want to mention that as well. So just be patient, let the election hit, let whatever's going to happen. And then once that's over, odds are a good setup is going to appear. Now, also with that being said, in times of high volatility, oftentimes what happens is the normal size move that would typically take place on a 30-minute, 4-hour time frame is going to happen on a 1-minute time frame. Okay, so if you're not prepared for that, then just stay out of the market completely, because otherwise it's very risky conditions. Yes, you can make a lot of money fast. You can also lose a lot of money fast. Okay, so with that being said, I want to make sure I was clear on that. And then on Wednesday is, I'm not really sure what ISM is. I don't know what that is. It's red folder, so it must be something. Wednesday should be a normal day of trading. So my guess is that Monday, probably barely anything happens because right before the election, or some fake outs happen possibly to set up the election. Could be a possibility. Wednesday is probably going to be a clean day because usually after a major news event, it just makes good setups for smart money moves. Usually is what happens. Okay, so I did want to mention that as well. And then Thursday, this is another major news day. There is GBP, if you do trade the British pound, the Great Britain pound, if you do trade that, there's 7 a.m. I'm not sure what time zone this clock is in right now. I think it's in, I'm not sure, I have to check. Okay, it's in Central Time, Daylight Savings Time. So Daylight Savings is on or off? Like, what time is it for you guys right now? Because I'm just making sure, because it says it's 2 for me and I'm in Central Time. So it should be off or what? I think, right? Because Daylight Savings during the summer. Yeah. Okay. All right. Perfect. All right. Cool. So yeah. Thursday, for any of you guys that have traded FOMC in the past, this is what I have my eyes on. I trade FOMC every time. I love trading FOMC. I back tested it for the last 2 years. So I'm pretty familiar on what to expect on FOMC. So I'll definitely be trading that more than likely. The press conference afterwards sometimes increases volatility as well. So a lot can happen. Wednesday and Thursday is probably going to be the best trading days. You probably more or less want to stay out Monday and Tuesday. Wednesday and Thursday are tradable. Okay. Wanted to mention FOMC is typically highly volatile. A lot of times it goes straight in one direction. A lot of times it fakes out. So there's no like exact what to expect, but what to expect is volatility, and what to expect is you don't want to be in a trade when it hits because it can skip your stop loss. Now, with that being said, what is skipping a stop loss? It's like if you have a stop loss set or take profit, you could get lucky and skip your take profit. I know someone that happened to once, but it's like, let me just put it down on the chart. Okay, and I do have setups for all these 4 pairs. So let's say, for example, this is a daily time frame, but let's just take it down. Let's say, for example, let's say you entered right here. You're holding a buy right now. Your stop loss is break even. Okay, let's just theoretical situation. Okay, news hits, boom, it does that. What happens is your stop loss is no longer here. Your stop loss is wherever price opened up. So it could potentially skip your stop loss by something like that. So you want to make sure that you're not in a trade when election is, and you don't want to make sure that you're not in a trade when FOMC hits either, unless you were like, 100 pips or 200 pips in profit, just to be safe. But that's on a normal news event, normal red news event. The presidential election, it only happens once every 4 years, as you guys know. So that is not a normal news event by any means. And I want to show you guys what happened last presidential election on gold. And I'm going to get into this, and then I'm going to get into the setups that we have for this week as well. Okay. So what happened last election in 2016 was this candle right here. Okay. And as you can see, if you do the measuring stick, that is about a 630 pip daily wick, meaning it spiked up 600 pips, wicked all the way back to where it started. Okay. Now, keep in mind, in 2016, the average daily movement was about, looks like, let's see, what was it? 100 pips, maybe 100 pips here, 50 pips there, 200 pips there. Now, in 2020, these last couple months, the average daily candle is about anywhere from 200 to 400 pips. So the volatility is about probably 50 to 80% as high as it used to be. So it's something to keep in mind, something to be mindful of, that we could see something very dramatic. It doesn't mean we automatically will. It doesn't mean it's guaranteed that we will. It just means that I just want to make sure I'm clear enough that I just do not want to see someone blow their account on Tuesday, because I've seen it happen before. I've seen it happen back in January 2019. Was anyone here? Drop a 1 in the chat if you were trading in January 2019 and you remember the flash crash. There was a random flash crash last year in 2019 January, where out of nowhere, no news event, just randomly a bunch of pairs moved about 500 pips in 15 minutes, like out of nowhere for no reason whatsoever. Does anyone remember that? Yeah. And I know a guy, if you guys know Skaggs, right? Skaggs was in a sell. He was in a swing trade with USD JPY. He was in a sell. So Skaggs was in a, where was it? think it was right here, right? Or no, that was recently. That was Corona. That's 2020 Corona. But still, that happened too. It was this right here. Okay, so let's just pretend that didn't happen, right? So Skaggs was in a trade, if I'm not mistaken. He was in this trade somewhere up here, swing trade. His take profit was, I don't know, somewhere around here probably. Somewhere in there. And out of nowhere, you see this candle happen. And really, in the reality of, from the open of that day to that wick at the bottom was less than an hour. So I just wanted to point that out. It was less than an hour that happened. And that was about 400 pips. No news, no whatsoever. So anyone that was in a buy, not only did they not hit their stop loss at 108.6, their stop loss probably got hit like 106. Like it literally opened, like there was a 300 pip gap in the market. Like it did not, there was no price. There was absolutely no orders taken in this area. It just opened up right here. And then it continued down, spiked, made the wick, so on. Okay. So with that being said, let's say we do get a scenario where it does spike, okay, on the election. Okay, odds are that spike will probably be the lower high for the rest of the year and probably for next year as well. That is a good chance. That's a possibility. It's a very good possibility. So if we see a major spike in one direction, 500 pips, 1,000 pips, you don't have to try to catch the bottom or the top, but let's say it spikes, right? What you could do is wait for it to come back and retest and catch it. That's a possibility way we could possibly trade this. So I do want to keep you mindful and ready for that, because you could get into a nice swing trade here if you play it right. Just don't be greedy, don't force it, don't chase it. Okay, so there are a couple key areas on the DXY that I wanted to make known. Okay, I'm looking at this daily order block right here and this one right here. As market opens, it looks like, and I also want to point this out as well, on the monthly candle here, we have, what happened was is mitigated this monthly candle, this monthly order block right here. Everyone see the institutional candle, monthly. Okay, it's rejected and it's given us, for those of you that know candlestick patterns, it's given us the engulfing tweezer bottom on the monthly. So if I had to make a prediction, I would say more than likely that the dollar is going to increase. It's going to go up, more than likely. That would be my prediction. That's what I would be looking for, is it to go up. So if I'm looking for the dollar to go up, that means I would be looking for gold to go down. So that being said, it would be like, okay, where would we be looking to enter gold if it were to go down? Because you guys know gold is my main pair. That's the one that I trade the most. So if I expect the dollar to go up, doesn't mean it's going to, but it's just saying, okay, what would I look for if that were the case? So we have a couple key areas on gold as well. This daily order block, some of you guys know, we played off of this. I think Hassan called a trade off this. I took a trade off this. I didn't call it out, but it rejected here. Now I'm looking for it to come up here before I take any sells. But keeping in mind the fact that the election is happening, these highs are not out of question. And even this is not out of question. This is even a possibility up here, which this is what I would ultimately like to see. If we can see some dramatic spike up here and catch a wick entry on the sell, that would be sick. That would be sick. That's a possibility. And then also we have this guy down here. I am keeping in mind these areas. So on the short term, without any news or anything like that, I'm also eyeing this 4-hour order block right here. Those of you guys that traded gold, you may have seen this, but it rejected this pink area that I have marked, the last institutional candle down. It rejected that, and it gave us about 300 pips off that candle. And now I'm pretty much just looking to take it from here to here. That's what I'm looking for early in the week before the election. See if it can give us that. Okay. So a lot can happen. A lot can happen. But be aware. The main purpose of this call is just to like make sure no one's blowing their account on Tuesday. So, but I do have a couple setups as well. Okay, SPX. SPX, I have two different areas for buy and sell. We have these equal lows down here for SPX, and we have this order block up top right here. So whether we catch a buy here up to here, or whether we catch it to come in this area and take it down and take profit in those lows. Either way, two areas that are potential. USDcad. USDcad is, I like to sell with this. It kind of goes in line with the dollar. It played off this order block up top, and it rejected this guy, and I had a sell limit on this right here. It rejected it, and it's created equal highs. So this is a possible area we're looking for entry as well. Continuation down. That's USDcad. And then Euro USD as well. Euro USD on all time frames looking is pretty much the opposite of the dollar. So, and pay attention, we're in monthly order flow with Euro USD as we are with the dollar as well. So with that being said, what that means is pretty much it rejected off this monthly order block, meaning there's a lot of orders involved for it to do that. And you know, there's a short-term entry right here. We could probably see catch a nice move. And the optimal entry for me would be up here. Something that we could see for news. Like a lot could happen between now and FOMC, now and NFP. A lot can happen. Monthly or daily on UCAD. All right. Let's see. Yeah, this is the daily on UCAD. At this point in time, it's already gone up so much, and I don't usually like to buy this high up in a move. And if I were to buy it, I would like it to come back down to here in this area. So if I were looking for buys here, you could take that, and depending on what your own trading plan is, you could even take, you know, a sweep of this and rejection up. But that's just depending on your own personal rules and personal preference. USDCAD, like long term, it looks like it's going bullish. Same thing with the dollar. That's in my opinion. It looks like it's going up. This would be a short-term sell if you did look for a sell here. Okay. All right. Man, these vibes are going crazy right now. Who's listening to these vibes right now? Oh my god. So I'm gonna end it off like this. I have one last thing. Pretty much to note is the DXY. All right, let me just write this out for you. Tuesday is the election. Matter of fact, let me rewrite this. Monday should be normal. Tuesday is election. Wednesday should be normal. Thursday we have FOMC. And Friday we have NFP. Major news is, so a lot is going to happen this week. Whatever you see now is more than likely there's going to be a lot more structure to play off of later in the week. So be patient, stay safe out there. Monthly highs and USDcad monthly. Let's see. What were you saying? You said equal highs on monthly USDcad. What wicks are you talking about? Oh, these right here? I just point on the screen right now. Oh, well, yeah. Okay, I see you. Yeah, honestly, at this point, at this point in time, like with the election, you never know. You never know, man. And I would like to see that too. I would like to see that too. I'm not really too big on swing trading this time to take it that far, but that would be a good, if you were swing trading it, you could, that's a different possibility you could do. Good. But yeah, that's really it. I mean, the only thing I'm really looking at is the gold. Really, that's what I'm keeping my focus on, gold for the most part. But all right. Does anyone have anything they want to go over? Does anyone have any questions on this? Does anyone have any comments? Does anyone okay. Main thing is to make sure you know when the news are, and don't forget, like put a whiteboard up or something, put an alarm in your phone. Does anyone know what time the election is? Yeah, it's possible. SPX, I mean, yeah, it's all possible. I mean, the way I really approach the market is like, I know like it's cool and it's fun to like think about what's going to happen next, and that's cool. The way I view the market is that I'm really my laser focus is on the next trade, and that's it. Like I don't really see a need to even pay attention or give any of my attention span to anything other than the next trade that I'm about to take. And because the main reason why is because the market does not give a fuck what I think. Doesn't care. Does not care what I think at all. So I'm literally, yes, I do think that. And it's interesting. Like anything can happen. I think we're gonna see gold go up early in the week, and then at the end of the week, who knows? Who knows is gonna happen. What I would like to see happen is that we see a massive spike up on gold. I would love to see that. I don't mind if I'm selling up here or if I'm buying down here. I don't care. I don't care which one happens first or whether they happen or not. But this area, short-term sells, that 4-hour short-term buys is where I would look to enter. But that's just me. This area is still as well. I didn't even mark that, but this area as well is a possibility. Buying gold due to fear, yeah, for sure. I can see that. And here's one last thing I will say. Whenever, now gold and the DXY they're obviously opposites, right? They're obviously opposites, but does not necessarily mean that they're going to follow oppositely. But I will say this, sometimes during massive news, gold is lagged behind dollar. So meaning what I mean by that is, let's say the dollar makes, let's just say, for example, dollar like tanks down. So that would mean gold should go up, right? So the dollar tanks down, that means gold should go up. So let's say the dollar tanks hard and gold tanks hard too. what you would expect is, okay, where is it tanking to for me to look for a buy? Because if I know the dollar went down hard, gold should be going up. But sometimes there's like a few hour delay or even a day or two delay. And we saw this for the Corona hit. We saw this in the Corona hit where gold was supposed to go up based on the news, but it tanked straight down. And it was like the fakest drop of all time. And I'll show you. For those of you that don't remember, it was like the news on the dollar was bearish, if I'm not mistaken. The dollar was bearish, and while that happened, gold was tanking as well. And I'm like, oh God, it's literally just setting up for the best buy of all time. And it did. It of course did. That let off this daily order block right there. And it actually swept it, I believe. And it may have did a sweep here as well. Okay, can't tell. It's pretty much playing off this general area. Yeah. So sometimes we could see that. So I would say that's always a good extra confirmation. Let's say the dollar flies to the moon. Let's say dollar flies up and then gold spikes up with it. It's like, okay, that means gold's setting up for a sell. This is the ideal area. It's really far away. It's like 1,500 pips away, but for election, that's not that far. That could happen. That could happen on Tuesday. I could see that. So I would hopefully, I'm thinking it's going to end up being a sell. So that's just kind of what I'm feeling is it's going to end up dropping. So I think it's going to spike up to something. That's just what I personally believe is going to happen. Not that the market cares, but that's what I kind of feel like is going to happen. It's going to do some fake spike up to sell it down, because the reason why I think that is because the dollar, mostly because of the dollar, but also just because of it's November right now. And I think we're going to see a massive drop on gold, but it's going to be quick. I don't think it's going to last too long. But shit, like I said, don't matter. They don't care what I think. I'm just giving you like something, you know, based off, maybe it's extra confirmation for you or not. I don't know. But I keep focused on the main idea, on the next trade. Stay focused on the next trade. Don't worry about what everyone else thinks. Don't even worry about what I think. Like, just focus on your own plan, focus on your own rules, focus on your own trades. And what anyone else says is just extra confirmation. That's it. It's not I'm going to trade based off of this person's opinion. And I used to do that a lot. I used to mess myself up a lot where I knew what I was doing. I could take my own trades. And then there was a couple times where I would listen to someone else rather than myself. And you guys have probably done that before as well. You listen to someone else and then it mess you up, or you second guess yourself, and then, you know, and then now you don't know what to do next. Well, the first time that I became profitable off my own trades was really quickly, but it took a long time for the consistency to sustain. Because what typically would happen in my trading career, what would happen is this is what it would look like. I'll write about. It would be about 2 months of consistent growth of, let's just say, a total 50%. Like, it takes 2 months to grow 50% consistently, compounding, you know. And then what would happen is 3 days minus 40%. And then what happened was, you know, week off, okay? And then it would be 1 month. And then 1 day wipes the 1 month. And then it would be 4 months. And then on some level, and what I've gotten better with, because I'm not perfect with this, is pretty much when you have that 4 months of consistency, let's just say you doubled your account, is if you do have a sharp turnoff, you know, for it to be, you know, only a smaller percentage of the total you just grew. Does that make sense? So my gap has been getting smaller and smaller and smaller, because it still happens to me. It still happens to me on some level. And what I've gotten better with is knowing when to stop and knowing when, okay, and this can help you a lot. It's like, okay, on this particular day, I did not execute my trading plan. So what that means is I'm either not going to trade tomorrow, I'm going to be done for the week, or I'm going to completely reevaluate my plan before I continue. And that's something you have to do. It's a humbling experience, because if you don't do that, if you're not willing to do that, then, you know, trading is going to be trading will really hurt your feelings. Trading has hurt my feelings many times. So it's like, can you either remove that? Can you either remove this? Can you remove that? And most traders have something similar to this. They consistently grow, and then something happens emotionally, and then there's a sharp turn off. So to be aware of when that happens, and the best thing you can do is just get clear. When I say clear, I mean clear on your rules. Very clear on your rules. Creating a trading plan is the second most important thing you can do. Creating a trading plan is the second most important. You know what's the first most important? Let me know if you drop in the comments if you can have a guess. What's the first most important? Clear, then cleared. It is the first important is executing the trading plan. That's it. Execution, because what Mark Douglas calls is the profit gap. The difference in money that you would have made if you had executed your trading plan perfectly, and the amount of money and profit that you actually ended up with. It's called the profit gap. So be willing to understand and know that to be a long-term, consistent, successful trader, to pull consistent profits out of the market, you have to be able to clearly define your rules and execute your rules. And there's no ifs, ands, or buts about that. There's no like, oh, well, I think this is going to happen, so I'm going to enter. Oh, well, this is what I think, or I'm just going to have it on a whim. Well, I'm just feeling like it right now. Like, you're going to have to remove those emotions. You're going to have to remove those emotions. And it's tough. It takes some time. Like, it will take some time because your ego will get in the way from time to time and say, oh, this doesn't matter. It's not that important. Oh, it's nothing. But small losses add up over time. And what's more important than the losses adding up over time is the fact that it's a habit. Like, one thing Kevin Trudeau talks about is like, if you are not doing it correctly, by definition, you're doing it incorrectly, and you can become unconsciously competent doing it the wrong way. So know what the right way is and just make it a habit to literally consciously apply effort in applying the right way to do it. And that is creating a trading plan and executing your trading plan and never entering outside of your trading plan. Like, I have some nice setups for tonight, but I'm not going to enter them unless they're in my trading window because I have learned the hard way too many times. That's just my rules. It's not because I could have made some money tonight. Oh yeah, I probably could have. That's not the point. The whole point is discipline, because it's not about what you can do for a week or for a month or even for a year. It's like, what can you do for your career? Like, what can you do for your trading career? Because at some point in time, you're going to have to get this right. So you might as well just do it now. Instead of just saying, oh, well, you know, in a couple years, then I'll do it. Then I'll do it the right way. Or in a couple months, then I'll follow all my rules. No, like, literally create a plan. And I'll go over, and I've done this before, but you've probably seen this before, this explanation. It's the simplest way that I've found to create a trading plan. It makes sense. It's simple. You can elaborate on it as much as you want. Okay? You can elaborate on it as much as you want. Okay? And if you're not sure how to create a trading plan, what you could do is put it on a whiteboard right in front of your desk. You can put your trading journal on a whiteboard right in front of your desk. That's what helps me, because you can see exactly what you need to see at all times. This is important. Okay? Step 1, what am I trading? I'm trading gold, okay? What time am I trading? Okay. 8 a.m. to 10 a.m. is my entry window. Believe it or not, guys, when you have a trade marked up and you don't enter and it wins, it actually helps you and not hurts you. Let me say that again. If you have a markup and you don't enter because it does not follow all of your rules, then you just got to win. That's a mental win. You just won over yourself. But if you see something that's not out of your trading plan, whether you win or lose, if you enter, you lost. Because you lost discipline over yourself. And we have to learn the hard way to really do this. And this is what is And the only reason I'm telling you this is because this is what I have struggled with the most. That's what I've struggled with the most. It's what's held me back from being more consistent. It's what's held me back from making more money, is the fact of being disciplined to execute exactly what I had set out. Because when you have specific rules, there's no such thing as thinking. There's no such thing as wondering what's going to happen next. It doesn't matter. It's irrelevant. What matters is I'm going to execute my plan, because my plan is a system to allow me to consistently extract profits from the market. It's not about being right or wrong. It's not about knowing what's going to happen next. It's about having clearly defined rules, which step number 3 is, what is your setup? Now, I have 5 setups that I enter off of. You may want to start off with less than 5, and you don't even need 5. You need 1. You need 1 that you can follow. Okay. And for example, what is your setup? Just one of my examples is sweep of liquidity, candle confirmation. That's one of mine. One of mine is limit at clean order block. One of mine is candle confirmation inside order block. Just as an example, like get specific and really more specific than that as well. But I'm just using this as an example. Okay. And number 4 is, what is my management risk goal, or what, however you want to word that. You could say risk max 1% per trade, go break even at 1-to-1. You could say done for the week at, whatever percentage it is for you, plus 5%, or plus 10%. The rules aren't important. It's the matter of you being able to set rules and follow them is what's the most important. It does not matter what the strategy or the plan is, but it's your ability to execute your plan. Because when you have specific rules, it really removes emotions from the market, because you're not attached to what happens next, because on a trade-by-trade basis, you don't know which one's going to win or lose. You just know that over a period of trades, these are my rules, these are what I back-tested, and I know that through my risk reward over time, I will be profitable every time. Okay, and you can include that in your setup. You could say, my risk reward is a minimum of 1-to-2 or 1-to-3 or 1-to-4, whatever it is for you. Okay, and say, look, you guys realize the math on this, right? If you use a risk reward of 1-to-3, use a risk reward of 1-to-3, all you have to do is win 3 out of 10, and you're a consistently profitable trader. Like, you see how simple that really is? Like, if you think about it, and we just as human beings overcomplicate. We overcomplicate thinking we have to be right all the time. Look, if you win 3 out of 10, that's plus 3% times 3 equals plus 9%. Okay, minus 1% times 7 equals what? Minus 7%, which overall is plus 2%. Like, you could have a terrible week, a terrible month, win only 3 out of 10, and still be profitable. Okay, if your risk reward is 1-to-2, you could win 4 out of 10. That's a pretty, like, if you ask me, that's pretty terrible. It's a pretty terrible percentage, but you're still profitable is the point. You could have a terrible week and you're still profitable, because your risk to reward will, it's like what you lock up in, no, that's different. That's a different quote. Never mind. But anyway, plus 2% times 4 equals plus 8%, and minus 1% times 6. Look at that. So overall, you're still in profit 2%. And that's like so bad. And what happens is, we either don't follow the risk management, we don't follow the risk reward. Okay. So what's a really important part about this is clearly define the risk and predefine the risk of every single trade. If it follows your risk management, if it's the pairs you said you're going to trade, if it's the time you're trading, and if it follows your setup, you use risk management and you use your proper risk reward, you have nothing to think about. You execute, boom, that's that. You don't care if you win or lose. It doesn't matter. You know, it follows your rules, so you enter. You can always change your rules later, but you can't change your rules while you're trading. And one phrase that really stuck with me, I think it was from Mark Douglas, is what he said is all decisions in trading are made before you ever enter the trade. They're made before you ever enter the trade. You know exactly what you're going to do before each session. You know exactly what you're going to do before each week. You know what you're going to do ahead of time. So therefore, your decisions are made while constructing your trading plan. Your decisions are made while constructing your trading plan. The only other decisions you would ever make while trading is how you're going to take profits or when you're going to take profits. And you can even put that in your trading plan if you want to. You can get as specific as you want. Depends on what's your own discipline, how disciplined you want to be, and so on. But hopefully this helps. Hopefully this helps. This has helped me. This has completely changed the game for me, trading. Without this trading plan, you're really, or just without a trading plan in general, you're leaving it up for chance. And in the long run, how consistent can you really be if you don't have a specific, consistent plan? Like, think about that. If you don't have a consistent plan of action, how consistent can you be? And you can relate that to anything in life. Like, if you don't have a consistent plan of action of what you're going to do, you know, you're just relying on your memory that, oh, I know what my rules are, you know, and after a while, it's like you may forget. Like, something may happen, you know, and so on, and then now you don't know your rules are. Now you have to restart. Now you blew the account, or because you didn't have clearly specific rules. So this is really powerful. Hopefully you guys got something from this. The trading plan is very powerful. So trading plan, the news Monday is nothing. Tuesday's election, Thursday's FOMC, Friday's NFP. So much love, y'all. Happy trading this week. Stay safe.